Hello guys, welcome to today's edition of London Session Review and Outlook. My name is Alejandro Zambrano and I will be giving you an update on the markets. But before we start, I want to stress that trading financial markets is risky and that unfortunately there's also the risk of losing all of our invested money. Okay, so it's July 15th, 2014 and we did get some interesting stuff today. We did get some higher UK inflation and that actually pushed the pound substantially higher on the news. Why? Well, quite straightforward, guys. The central bank is not really anticipating inflation to be at current levels. They actually expect inflation to be just a little bit lower. And obviously, higher inflation will at some point cause the central bank to raise interest rates. In the case of the Bank of England, markets are right now pricing in a rate increase since, say, November, December. And that is the way the futures markets are pricing things in. And it makes sense. GDP growth is above trend. You have inflation also being quite high. Something though that is not to the benefit is the low wage and growth in the UK, because you see unemployment rate has come down, and that's something that the Bank of England will looking at. However, a good portion of the lower unemployment rate is due to people being self-employed. And if you think about it, if there was a real, strong labor market, then wages would also increase. And right now, wages are increasing with about 1% year over year, which is uh, far away from, say, an average of, say, 2% that we saw in 2010, and far away from, say, something like 4%, which was the norm before the crisis. So that's one way of looking at it. And obviously, this is most likely gonna pick up at one point. And I did write an article about this, the my longer term view on the UK economy. So this will obviously pick up at one point. Will we indeed get a rate increase in November? It's a little bit early to know right now, but that's what the market is priced in. I would say overall that a rate increase will come, and most likely, it's just a matter of when this is going to happen. So, with that in mind, if we look here at the technical levels, at the end of the day, we did have a move to the upside, but we didn't really manage to trade so much higher than the 172 level. And from a purely technical point of view, I personally think it is overbought. We did not take out the 71.90 level, and I personally think that we are still maybe be able to drift lower on the 170 level. From a purely trading point of view, I think for today, the best idea would have been just to work with limit orders, or if you have really quick fingers, just going long on a break above the pivot point, taking you to R1. Mentioned that on Twitter. They were trapped in a narrow range. We did move up higher. You got a bit of a short squeeze here, and things are now moving down lower. Uh, what can I say about this tomorrow then? Well, if we look at price, you know, on the daily chart, like the way it looks right now, it actually is not looking that good at all. To be honest with you, the way it looks right now. And let me see here if I can get some decent levels to work with. Right now, I think it's just going to move down lower, to be honest with you. I think it's going to move back down to 71 and probably going to be a little bit more boring here, to be honest with you. But I think 71 is still something we can work with. Now, maybe do something like this tomorrow and do something like that. But it's definitely just short-term traders, you know, try to grab a position for a day or so on technicals. Big picture, I still think it can be bullish. So see really no reason to not be bullish as long as you're above 67, the 67 level down here. I just want price to move down a bit. 69, I think, would be great, and from these levels look to go long again. So that's what we're looking at right now, and this is pound versus the US dollar. Next market is the euro. So the euro has been boring. It's been trapped here for some time. I've been warning about this. Reason is that the central bank of the eurozone cut rates and will probably not do so much more going forward. Then you also have the central bank of the United States and Janet Yellen, and we did get some comments from her today. And again, they say that rates are likely to stay low for a considerable period after QA finishes. And markets are anticipating a move higher, but it's not enough right now to cause a huge trend or rally here in the euro versus the US dollar. So she kind of comes back and forward. What they're looking for right now is the participation rate. It's actually at the lowest level since 1978. So even though unemployment rate has moved down, it's just, well, not just, but it's also due to the few amount of people actually participating in the labor market. Obviously, it's a ratio. If you have less people participating, then obviously this ratio is going to be better than it looks like. So this is something that they're looking at. They're also looking at wage growth, and it looks like they want to delay this. And this is something that obviously been on people's minds since 2013 and still not really getting things priced in. The Federal Reserve themselves expect the short-term interest rates to be higher, but the market is not buying that story. When it comes down to inflation, again, they don't really see this as something super important. They see the current uptick in inflation as something that is noise. So from a purely trading perspective, we're trapped on the daily chart. As you can see here, there's really not too much going on, to be honest with you. Now, what we can see is that we did get a break to the downside here in the very short term. Didn't get too much momentum, and the fact that the overall trend is still sluggish, I wouldn't really force. I wouldn't keep a short here overnight. Definitely not. We did have a bit of a decline. Does this mean that we can't trade down lower? We can. We took out these levels here. We had the monthly S1 and so on. Um, but I think people will probably short, if possible, close to the 36 level. I think we can be bearish on the 36. Let me see here. 36. Yeah, let's just go with 36.35. That's something that people are going to be working on. But from a purely risk reward ratio, again, we're trapped in this range. There's not too much going on. Central banks are not ready to act, so we're not getting a huge difference in what's happening in different monetary policies here. Hence, we're not getting too much momentum. Um, what needs for this to kick off then? I think we need to have a break on the 35 and the yearly low, which is 34.77 more or less. You can again, can bounce up to 36, move down low to 35. So still a potential, say, 100 pip. But I do like maybe taking advantage of this in other currency pairs like euro pound, which is something we'll be talking about lately. Next market, Aussie dollar. So Aussie dollar, we're focusing on a daily time frame. We did get the minutes from the central bank overnight, and they don't see no rush in, making any change in the key rates. Again, we have that idea here. There's really nothing going on. Of course, I do think that the central bank of the US will act before the central bank of the Australia. So, a break under 93.25 could, definitely take us down lower, but we're trading above that level. So, to be honest with you, I still keep a bullish bias here. This is only for someone that is interested to buy and keep this for a few weeks. This is the way it looks right now. And is this something that I would put my own money on? No, I don't really like this, to be honest with you, just because it's an overall sluggish trend. Next market is the dollar yen. Now, the dollar yen here, we had an opportunity to go long on a break above the prior high. And this break happened here as Janet Yellen was speaking, moved up a bit, but did not really take off. Moved up, moved down, and is still a short-term momentum here in this currency pair. You know, and if you're trading in the very short term, stop loss above 101.61 is reasonable, and you can look for this to reach 101.80. The idea was to go long here, and right now, people usually go long here. Say put initial stop loss or something reasonable like 100 and 150. I think this can be reduced now to the 61 level. So pretty much risking about 10 pip and look for this to move up higher and making more or less 10 pip back. In regards to the more longer term view, obviously it would have been great if they would have been more aggressive in a sense that rates will increase. Why? Because you tend to see the yen weakening and the dollar gaining as short-term money moves up higher. Next market is the price of gold. Now the gold here we had uh, two ideas here. I said overall as long as trade about 1305. Look for this to move up a little bit higher, maybe to something like 1316. If we get a break under here, we're gonna reach this level here, which is the 1292 level, which we reached. Here, what we could have done if we wanted it, could have gone long here for a while, kept this, but then here we should not hesitate when that breaks happen. You know why? Because if you look at the big picture, we have been declining lower here. We have been moving lower overall since yesterday, and we did take out this level. So now we have more of a bearish take on this whole market. Obviously, a little bit short-term oversold, but I would say, we definitely took out that low today and definitely under these levels. We reached the first target. Here's question forward, you know, uh, short on a bounce. That's what it is. Book gain on the short term, but then again, do something like this. I think that would be reasonable. And that is it pretty much. FTSE. So the idea with the FTSE was long on a break or buy in a dip. I want to buy here right now. Why? Well, because the overall trend is bullish. If I show you on the daily chart, we had fairly nice, interesting day here. Then you have another high here, also another bullish momentum. The entry was pretty much here. Look for move to the upside, and I like long from this level. Now, why did this to some extent move down lower overnight? Number one reason, or today I say, number one reason, obviously the inflation not being that strong, sorry, being too strong. In a sense, that is something that limits the potential growth, increases the pound, and when pound increases, then gains made by these companies abroad are will be declining because they need to, convert this back into pounds. What can I say about this overall? I think this was just a correction. I do think this was a reasonable level to buy. This was the weekly S1. Stop loss goes down here. The idea was just to buy the dip and look for 6,800. I think that makes a lot of sense. If I show you the 4 hour, you can see again what I'm looking at. Just looking for this to trade up higher here. You know, stop loss goes on 6,662. We move up, we make 800 pips, and we risk 40. So that is what we're looking at, and that is again, classic setup in a sense of a risk-reward ratio. Look to make 2 times the money and go with the trend if possible. As long as we don't kind of go against the trend, which we will do sometimes, we will be fine. And again, this is like excellent work in a sense that if it does reach a target, which I think makes a lot of sense, we make 2 times the money, and that's going to cover for losses that we have. And that is the way I like to look at the markets. Okay, so interesting day overall. Tomorrow we're going to get more UK numbers. We're going to get unemployment numbers. And again, it's going to be interesting to see, will labor market, or sorry, wage growth increase or not? Will the unemployment rate move down lower? Unemployment rate will probably do so. If we look at surveys, that is what the market is looking at right now. And obviously, if we do get that, then we can be even more bullish here. But personally, I think, and if we look at how the market is pricing things, and I think they are a little bit too aggressive, to be honest with you. And I think that overall it makes a lot of sense that I wouldn't go long unless you're just trading short term. That's what I would say. And talking about pound right now. And obviously, there's risk of disappointment as well, but trading against the trend is not the easiest thing to do. Guys, thanks so much. Talk soon, and hope to see you guys tomorrow. Thank you and goodbye.